Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit Equities. If you like our content, please don't forget to hit the like button. Also, subscribe to our channel, click on the bell button and choose all notifications to receive important financial updates from our channel at the earliest. In this video, we talk about 4 small companies from the plastic pipes segment which can be outperformers going forward and which have multiple growth drivers ahead. Please watch this video to know more about these companies which may be on the path to become multi-baggers. Also friends, this is not our own research. The source for this video can be found in the description section below. Now the first stock on the list is Phenolics Industries Limited, which is available at Rs 537.70 and the face value for it is 10. The symbol for it is FINPIPE. Now Phenolics Industries Limited is a manufacturer of polyvinyl chloride pipes and fittings and PVC resins. The company operates through polyvinyl chloride, PVC, pipes and fittings and power segment. The company offers its products in categories including agricultural pipes and fittings and plumbings and sanitation pipes and fittings. Now if you were to look at it, Phenolics Industries reported a mixed set of numbers for Q4 FY18. Revenue declined 9% but operating profits increased 5%. Decline in revenue was due to a 6% volume shrinkage in polyvinyl chloride resin segment. However, volumes in PVC pipes and fittings grew 12% year-on-year. The increase in operating margin was aided by margin expansion in PVC resin segment resulting from increase in PVC ethylene dichloride spread and inventory gains due to increase in crude oil prices. Despite a lackluster top line in Q4 FY18, the management seems confident of a double-digit volume growth and margin expansion in FY19. This will be mainly driven by non-agriculture division. In FY19, the company is planning to launch new products in the non-agriculture division which should drive its revenue share higher from the current 30% levels. On the capex front, Phenolics plans to add 30,000 megatons of capacity every year at an investment of Rs 30 crores. Now if you were to look at the 1-year chart, you would see that this company has done really nothing. It has been consolidating but since then has been declining rapidly. The market cap of the company is 6,672.61 crores, which means that the company is a mid-cap one. The EPS of 24.06 translates into a price to earnings ratio of 22.35, which is much below the industry PE of 25.22. The book value of 208.71 translates into a price to book ratio of 2.58, which also is not wildly expensive. The debt to equity is 0.0702, whereas the return on equity for this company is 0.1738. The company has a decent dividend yield of 2.14, whereas the promoter holding also is above average at 52.47. The 52-week high is 756.05, whereas the 52-week low for this company is 534.20. Now the second stock on the list is Jain Irrigation Systems Limited, which is available at Rs 80.65 and the face value for this stock is 2. The symbol for it is JISLJALEQS. Now Jain Irrigation Systems Limited is an agri-business company. The company is engaged in the manufacturing of plastic products and manufacture of fruit or vegetable juices, their concentrates, squashes and powder. Now the 1-year chart again shows that this company has been an underperformer throughout the year. Now if you were to look at it, Jain Irrigation reported a robust performance in Q4 FY18 as sales jumped 26% year-on-year to Rs 2,778 crores. EBITDA increased 24% to Rs 400 crores. Performance was noteworthy as it reported the highest ever top line and operating profit in the last 12 quarters. Top line growth was led by high-tech agri input product sales, which was up 34% year-on-year, and plastic division, which was up 29% year-on-year. Now interest expenses increased 16% year-on-year to Rs 133 crores on account of additional debt which was used to fund the $48 million acquisition of US-based micro irrigation dealers, Agri Valley Irrigation and Irrigation Design and Construction. The company expects revenue growth in excess of 15% in the coming year. This will be aided by its agro processing division, which is likely to grow 25 to 30% year on year in the current fiscal. It had a low base in FY18 as sales were impacted by fire at its plant. Now if you were to look at it, the company is a mid-cap with a market capitalization of 4003.19 crores. The EPS of 5.66 translates into a cheap price to earnings ratio of 14.25, which is largely in line with its industry price to earnings ratio of 13.41. The book value of 92.69 is also a good number since it discounts the price by a ratio of 0.87. The company has a debt to equity of 1.1003, whereas the return on equity for this company is 0.0516. The company has a dividend yield of 0.93, whereas the promoter holding for this stock is below average at 28.46. The 52-week high for the company is 150.40, whereas the 52-week low is 74.25. Now the third company on the list is Supreme Industries Limited, which is available at 1128.55, and the face value for this stock is 2. The symbol for it is SUPREMEIND. Now the Supreme Industries Limited is engaged in the manufacturing of plastic products. The company operates in two segments, which is plastics and construction. Now the 1-year chart shows that this company again has been a laggard, save but a couple of spikes throughout the year which were not sustained. Now if you were to look at it, Supreme Industries Q4 sales were up 15% year on year, led by volume growth of 8% year on year. Industrial and consumer segments witnessed volume growth in high teens. Piping segment, which contributes more than 50% to the revenue, reported a high single-digit volume growth. However, the packaging division reported a volume decline of 3%. Now, EBITDA margin improved year on year due to better margins in the piping and consumer businesses, offsetting lower share of value-added products and higher employee costs. During the year, the company increased its installed capacity by 5% to 568,000 megatons. The management is planning to add another 50,000 megatons capacity in FY19 by incurring an investment of Rs 300 to 350 crores. 2 new greenfield plants are expected this fiscal, one each in Telangana and the other in Rajasthan. Over the long run, Supreme Industries intends to increase its capacity to 7 lakh megatons by FY21, which in turn would lead to a proportionate increase in bottom line and top line. Now, if you were to look at the financials, the company has a market cap of 14,335.62 crores, which means that the company is a mid-cap one. The EPS of 32.24 translates into a price to earnings ratio of 35, which is largely in line with the industry PE of 33.57. The book value of 136.43 translates into a price to book ratio of 8.27, which is a bit on the higher side. The debt to equity is 0.1482, whereas the return on equity for this company is a strong number at 0.2405. The company has a dividend yield of 1.06%, whereas the promoter holding here is 49.70 and is largely average. The 52-week high for the company stands at 1476, whereas the 52-week low is 1020.10. Now the final stock on the list is Astral Technik Limited, which is available at 991.25, and the face value for it is 1. The symbol for it is ASTRAL. Now Astral Technik Limited is engaged in the production of plastic products. The company and its subsidiaries are engaged in the business of manufacturing and trading of pipes, fittings and adhesive solutions. Now, as is evident from the chart, the company has been on a beautiful uptrend throughout the year. Now, if you were to look at the company, you would see that Astral Polytechnic's standalone March quarter net sales rose 7% year on year due to a 10% increase in volumes. Earnings before interest, tax, depreciation and amortization, which is EBITDA margin, improved 142 basis points to 17.7% compared to the management guidance of 14 to 15%. Lower raw material costs aided margins, but this was slightly offset by higher other expenses. Now, international operations for this company, which is Seal IT Services, reported a 15% year-on-year growth in sales with the induction of new machinery at its US plant. Its US operations are expected to export higher margin adhesive products to both UK and India in the current year. While EBITDA margins are still in the high single digits, export of high margin adhesive products are expected to push EBITDA margin towards the management's guidance of double-digit margin in FY19. In the quarter gone by, the company started trial production at Ghiloth plant, which has an installed capacity of 22,700 tons. Commercial production will commence from Q2 onwards. Now FY19 is expected to witness a volume growth of about 15%, backed by both capacity expansion and better capacity utilization. Higher contribution from both Resinov Chemi and Seal IT Services divisions are expected to aid margins. It also benefits from backward integration in the pipes business. Now from a valuation standpoint, Astral Technik trades at a premium valuation given its business mode, strong business fundamentals and historic track record. Supreme Industries and Phenolics Industries appear fairly valued at 27 times and 21 times FY19 earnings respectively. Jan Irrigation trades at a discount to its peers due to the diversified nature of its business and lack of financial consistency. Earnings volatility should reduce going forward as the company has an order book in excess of Rs 4,000 crores. Current valuations offer a fairly attractive risk-reward ratio as the government's thrust on rural segment bodes well for the company. Its prospects seem bright, but trade war concerns could impact its US business. Apart from positives mentioned above, the initial public offering of its food processing division with an FY18 top line of over Rs 1,600 crores will be another trigger which should play out in the medium term. Now friends, please go ahead and do your own research. Please don't consider this to be a recommendation from us. This and all other content that you see on our channel is intended to be a piece of news. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.